Hi, good evening. Um, I hope you guys are having a great evening. Welcome to this live stream. I am just finishing up some technical things, and so I'm just going to put back um, the stream will start shortly. View for a couple of minutes, and then I'm going to come back in a couple of minutes. So, yeah, you're welcome to the live stream. Just if you're in the chat, please introduce yourself and let me know what you're interested in learning, what you want to learn, and if you've ever invested before, or if this is your first time actually getting to, learn about investment. So just let me know what you where you're coming from, where you're joining us from, what you want to learn, and then I am going to read those, show those on screen, and then we'll see who we have here. But then I'm going to just turn off my camera and my mic for a couple of minutes, and then sort out a couple of technical issues with the stream, and then I'll join you. So yeah, let's see. Just a couple of minutes. Okay. All right. Is currently on Achieve app and she wants to know more. And so far, so good. Fred is also joining us. Enrique is joining us from Accra, has done a few fixed deposits and is hoping to have more options for investing and have some good tips. Maxwell is also joining us. Maxwell says, good evening. So yes, good evening, everyone. Yeah, so I am just going to upload my presentation. Just jump technology stuff. Can take a while to figure out. So yeah, just keep the comments coming. And I'm going to upload my presentation. So Evans is also joining us. Evans says, good evening. Okay, here it is. And nice, here we go. If you can see the presentation, please let me know in the chat. If you can see the presentation, let me know in the chat. But can you guys hear me? Can you guys hear me? Oh, nice. There we go. Presentation has loaded. Yes. So welcome everyone to this presentation on introduction to the stock market, or introduction to stock market investing. And so for those of you who do not know me, my name is 𝐰𝐳𝐧𝐿. I am an entrepreneur and I am also a personal finance enthusiast. I run 𝒕𝒐𝒄𝒌, which is a personal finance platform that helps young people become smarter about their money. And so over the past few weeks, I have been getting a lot of requests from different people to, talk about stocks and how to get started with investing in stocks. And so that is exactly what we're going to be doing today. I'm going to be introducing you to the stock market or investing in the stock market and how to make money from the stock market. This is meant and it is not for experts in stock markets. This is not going to make you an expert in investing in the stock market. It is to help you understand what the stock market is, how you make money from it, and how to get started. And it's supposed to be a foundation that you can build on later on. We are going to by first understanding okay, so this is how this session is going to go. We're going to look at the stock market. We're going to look at how people make money from the stock market. We're going to look at different and we're going to do the app we're going to be using today, which is Bamboo, and looking at how it works with it. We're going to look at ETF or exchange traded funds, stocks as a long-term strategy, and then risks with the stock market and how to stay calm. So, like I mentioned earlier on, I run a personal finance platform called 𝒕𝒐𝒄𝒌, which provides free resources to help you get money. And so, good, personal finance habits, then check out 𝒕𝒐𝒄𝒌 at 𝒕𝒐𝒄𝒌 Finance. Yes, I also recently released a free resource, which is a guide that walks you through different savings and investment options in Ghana. So you can. So with that introduction, let's go straight to today's session. Now, when we talk about the stock market, think of it like a regular market. People buy and sell stuff, and that is not. I mean, that is exactly what a market is, and the stock is where people buy. And what is a stock? A stock is essentially a piece of a company. So think of it like a slice of pizza. Think of the ownership of a company like a slice of pizza. And so you can go on the stock market, look for your favorite company, and get one slice of the company. Interchangeably. So when you own a share, it's equivalent to owning a piece of that company. Now, similar to how we have different markets in Ghana, there is Medina market, there is Malata market, there is Nima market. We also have different stock exchanges. New York Stock Exchange, which is NYSE. We have NASDAQ, and in Ghana, we have the Ghana Stock Exchange, and so on. So different companies list on different exchanges, okay? So let's say if you wanted to buy MTN Ghana shares, the place you can buy MTN is the NASDAQ, right? The different markets where different have prices similar, and then you can buy different things with different prices. Shares have prices as well, and then the price of these shares are driven. Right. So if there's a particular a lot, or for some reason a lot of people want to buy, the price of that share is going to increase. If there is a particular share that people feel like is not a good share, then the price of that share is a brief intro about is. So let's move on to how it actually works. So as I mentioned, companies sell shares on a stock exchange to raise money through what. So let's say that something big, and then we feel like we want to raise money. So we'll go and sell part of the company on the Ghana Stock Exchange, right? We'll go and list shares, our shares on the Ghana Stock Exchange in an event called an initial public offering. So once we list those shares, people buy those shares. And now once those shares have been bought, investors can now trade those shares with each other. Okay, so let's say we list 1 million shares in our initial public offering, and then all of those shares get bought up by investors at, let's say, 10 cedis per share. Investors own that share, they can decide, and when some of them sell, it becomes available on the market for other people to buy. Yeah, so that is how the stock market works. So prices of the shares move up and down daily. So the people who buy shares are betting on the future growth of the company. So if someone buys 𝒂𝒐 Technology shares, they're buying the shares because they feel like it's a promising company. We think that company will do well. They will come up with new products. They will sell those products. People will love those products and will buy those products. They are going to make a lot of profits, and in turn, the value of the company will increase. And once the value of the company increases, so will the share price increase. And so, with the share price increasing, it means that the value that is going to appreciate, and then now so that is the whole in short, that is like the basic economics. Let me know if you can. I may be having a couple of connection issues, so let me know if you can hear me or if the stream is breaking. So before we continue, a question that if there was a company whose share you could buy today, what company would you love to buy? And then let's see what company, whose stock you'd love to own. So while you are, putting that in the chat, and let me tell you how you make money on the stock market. Now, the way people make money on the stock market is two ways. There are two main ways to make money. The first one is what we call capital. Capital gains is you buy a stock at a low price and hope to sell it at a high price and pocket the difference between the amount you bought it for and the amount you sold it for. Okay, so let's say that I bought on for $100. Okay, let's say I bought NVIDIA stock for $100 on, I'm trying to see what date this is, on April 21st, Monday, April 21st. And then on April 21st, the September, what day is today? September 17th, right? And then today the share price is $174. If I sell my shares of NVIDIA right now, I make a $74 profit. Okay. And so if I had 10 shares of NVIDIA and then I sold all of them, I bought all of them at $100 and I sold all of them today at $174, I would have $740 as my profit. So that is simply how you make money on the stock market. It's similar to anybody who goes to buy stuff at wholesale. They buy stuff at wholesale price and then they come and sell at retail price and then they that's just simply so you know what, just a minute, let me try and see if I can reduce the resolution of my video. The connections and the breakages are less intermittent. So I'm going to try to do this. It doesn't appear I can do that, so I think we're just going to go with the case. Is usually that people who buy shares and does well, it reports good results, and then you can profit from the difference between how much you bought it for and how much you sell it for. And the opposite is true. Let's say that today NVIDIA stock is $174. Let's say you bought NVIDIA stock at $174 and something happens. Maybe there is a scandal, or the products don't do well, or something happens. Their financial performance is low. People start to feel like, oh, anymore. So selling their shares. What that means is that the share price decrease because there's less demand for it. So if you decide to, you lose money because you would have at a low price, right? So the opposite is true, that you can lose money on the stock market as well. Now, I have also seen comments. There is a platform, a popular investment platform in Ghana called Achieve, which started making it possible was in value and all of that, which and how the stock market works. And the thing is that if you can make money selling shares, you can also lose money selling shares, because if you happen to buy at a high price and sell at a low price, you lose money. So that is the first gains. We look at the second way that you make money. And the second way you make money on the stock market is dividends. We call them dividends. Now, what are dividends? Dividends are simply regular cash payments that companies make to the investors who hold their stock. So one company in Ghana that pays dividends is MTN. So if you have MTN shares, periodically, I think it's every quarter or every 6 months, I'm not sure, MTN will pay you a portion of their profits dependent on how many shares of MTN. And then MTN decides that part of the profits they made, they are sharing with you, the shareholder, and they are paying 50 pesos per share. If you have 1,000 shares, that means you get 500 cedis every quarter or every 6 months as dividends. So that is another way that you also make money from the stock market, by receiving dividends from. So differ a steady stream of this over time. So imagine you have a lot of shares. You have the shares. You hold shares of a lot of company that pay dividends. Then that is a regular income that comes into you because you hold those shares. So that is the second way in which you make money from stocks. But for most people, especially for most beginners, the way that you make the most money is through capital gains. I hope that is clear. Please, if you are learning something, type something in the chat, and then let me see that you're learning, you're hearing me, you're learning something new. Right, so let's move on to the next thing, which is how do we actually get started with investing in the stock market? The way you would be able to access the stock market, now the way you'll be able to access the easiest way to access the stock market is to use an investment app which allows you to trade on the stock market. So there are different apps that are available. Stock market. In Hood, there is eToro, there is Achieve, there is Schwab, there is IBKR, and so on. Now, some like me, the West, like America, and so on. Now, in Africa, one of the choices that I believe is a good choice if you want to start investing in the stock market is Bamboo. So Bamboo is a Nigerian, they originate from Nigeria, and they originate from Nigeria, and they have operations in Ghana, South Africa, Kenya, and other African countries. And they allow you to easily sign up, fund your account, and buy US stocks with your local account or your local debit card. So that is what we're going to be using out today, or that's how that's investing in the stock market. So the process is quite easy. It's just a few steps. First, you have to download the app. The second is you have to set up and verify your account. Then you have to fund your account. That is, you need to put money in your stock account, in this case, your Bamboo account. Then next, you have to browse the stocks that you are interested in, and then you place your first order. So we are going to just go through that briefly. If you do not have Bamboo yet, I'm going to show a QR code on screen. It's on the top left of your screen. You can scan the QR code. That's if you are not watching with your phone. You can scan the QR code, or you can simply go to your Google Play Store or Apple App Store and download Bamboo. But even if you are not able to do it now, I think that once you follow through the process, be able to do so. And so let's look at the first step. The first step you Play Store or the App Store, whichever one you use, depending on your whether you use Android or whether you use Apple. I think that we have some breakages, so I'm just going to wait a moment while the stream evens out. It appears I'm having some internet connectivity issues, which I am trying to resolve. So just hold on a minute while I resolve the internet issues. But if you can hear me, please type something in the comments so that I know that the internet is back. Okay. I think that we are okay now with the internet, so I'm going to proceed. Yeah, so I'm hoping that over the break you went ahead to download the app. Thank you, Philip, for posting the link in the chat as well. Right, so the first step is to download the app. Then the next step is to the next step is actually to complete your details. So you sign up. Now, the sign up process can be a little long because of regulation. So government of Ghana will usually require KYC, where you have to upload your Ghana card and you have to like take a selfie and you have to choose your investment profile and so on. So those are just formalities and then they are necessary because the government of Ghana requires them. So once you go through the process of completing, putting in all of your information, putting in your Ghana card, verifying yourself and completing your KYC, you will now be able to fund the account. So this is a demo account that I set up, and so once you have completed the KYC and you open the Bamboo app, you have the opportunity to fund your account either in US dollars or in Ghana cedis. You need to fund your account because that is how you are going to buy the stocks. So after funding the account, and I think you can fund it by Momo or your debit card. So once you have put money inside of the account, then you can start buying the stocks. So let's assume that you funded the account. The next step is to browse stocks. So for the markets that are represented in the Bamboo app, you'll be able to see all of the companies that are listed there. I don't have a screenshot of that. I forgot to add a screenshot of that. But you see Apple, Tesla, Google, all of the different companies whose stock you want to buy. And then you can browse the stock. So once you browse the stock, so in this screenshot, I'm showing you Apple. So once you browse the stock, you can, find out more information about that company. So there is a tab that allows you to, you find a stock, you can see like different information about the stock. So you can see whether, the stock is doing well or not, how volatile the stock has been. So if you look on this screenshot, you are seeing a graph of how the stock has been over the last, this is showing today. So you can select today, 1 week, 1 month, 2 months, 1 year, 5 years, and so on. So you see how the stock is performing or has performed over a period of time. And then if you want to buy the stock, then you can go ahead and buy the stock. Yeah. So after you've browsed the stock, then you can go ahead and then you enter how many shares of that stock you want. And then you can now, place the order. If you have enough balance, the order will go through. If you do not have enough balance, it will prompt you to make a deposit. Now, there are other things that are a little technical, so I don't want to go into them. So you can decide how you even want to buy the stock, whether you want to buy it right now at the current market rate, or if you want to set a certain amount that you want to pay for the stock, right? So for instance, maybe you've seen Apple stock, and then Apple stock is currently, I don't know what Apple stock is currently, but probably about $200 and something, and you're like, nah, I don't want to pay $250 for Apple stock. So I'm going to set a limit and say that, okay, I am going to buy Apple stock when, okay, so Apple stock is currently $239, right? But then you decide that you don't want to buy the stock at $239. You want to buy the stock when it comes down to $200. So you can select when you're buying the stock, part of the options I don't know if I have a screenshot of that. Okay, great. So if you look here, you see that on the second screenshot, you see buy now, limit order, stop order, buy every month. Those are like the ways that you can choose to purchase the stock. So a limit order would be you set the price you want to buy the stock. So once the price comes down to that, once the stock comes down to that price, then your order will automatically execute, right? So if you buy now, then you are buying it at the current price. If you set a limit order, if you set a limit order, then it means that you are setting the price you want to buy the stock. So you don't want to be opening the platform every day to be checking whether the stock has reached there. So it's like you set a price that, okay, if it gets to this price, then I want to buy the stock. So that is a limit order. But that is a little technical, right? So this is just an introductory lesson, and so you can go ahead and then watch some videos and learn more about the different ways you can buy stock. Okay, now so if you find a stock you want to buy, let's say Apple stock, so you see the price of Apple. Apple currently says $239.60. That is the current price of Apple stock. If you click buy now, then it means you are paying $239.60 per Apple share. So then you select how many shares you want to buy: 10 shares, 100 shares, 2,000 shares, depending on how much you have. And then you place the order, and then it goes through, and now you become the owner of that piece of Apple stock. And then you can say, I am part owner of Apple company. If you want to place a limit order also, then you can specify, okay, I want to buy the stock at $200. So I will put in $200, and then when the stock comes down to $200, then I buy. But it could be that the stock never comes down to $200, which means your order will not be filled. It will just be there. And you can, there are some platforms that allow you to specify how long you want to keep that order for, and so on. Now, Hassan is asking, how much can you start with? Now, there are some platforms with Bamboo being one of them, where you can buy what we call fractional shares, which means that if the share is, let's say Apple stock is $239, but you don't have $239 to buy a full share, you can buy a fractional share, which means you put in how much you want to buy. So if you look in this third screenshot, you see that I have put 50, which means that I have $50. I want to buy some Apple shares. It's not enough to buy the full share, but that is a fractional share. So if you see that the number of shares over here is 0.2 something. That is 20, like one fifth of an Apple share, right? So it allows such that even if you don't have the full amount to buy the share of a particular company, you can put in how much you have, and then still execute the trade that way. So that is fractional. So yeah, Bamboo allows you to buy what we call fractional shares. So that is how you go through the process of setting up your accounts to buy your first share. It is quite simple. The process is simple, but then how do you know what share to buy? Because prices are going up, prices are going down. How do you know whether this price will go up or this price will not go up? Because I think the last thing you want is to put in your money in shares and then lose that money. And that is where what we call index funds or ETFs come in, right? So there are two ways you can buy shares. You can buy the shares of an individual company, which is like a single stock, like Apple, or you can buy into a basket of shares, which is called an index fund. So if you are a beginner, the best way to start investing in stocks is to use index funds, or what we call ETFs. ETFs means exchange traded funds. So basically what index funds are is that it's a basket of several companies that you can invest in. So for instance, rather than buy just one Apple stock, you can buy a fund that contains Apple, Nvidia, Facebook, Google, and so on. So there are lots of different ETFs which have different companies that make up that index, right? And so the good thing about ETFs is that if a company is not doing well, if one company is not doing well, another company is doing well, right? So your risk is spread across lots of different companies. It's very, very unlikely that all of the companies in the fund will fail at the same time, right? And so it's a safer way for beginners to start investing in stock. And it carries less risk compared to if you are buying individual stocks. So with ETFs, you are betting, instead of betting on one football player, you are betting on the whole team, right? So yeah, so I hope that is your that makes you understand what ETFs are. So let me ask you a question again. Would you rather invest in one favorite company, or would you rather invest in a basket of 500 companies? Let me know what you think you'd rather do if you were investing. I mean, there are some people who are like, I love Apple so much, I will never use an Android phone. I will always use an iPhone, and I love the company so much that I want to buy their stock, right? But do you think you should buy just Apple stock, or would you rather buy stocks of Apple and lots of other companies as well? So if you are starting, if you are beginning to buy shares, or if you are beginning with investing in the stock market, it's always a better idea to buy into an index fund or an ETF. And as you go along, once you start becoming more conversant with how shares work and how stocks work, then you can start picking your individual stocks. So let me go in the comments and see what some people are saying. Yeah, so I see Bernard says he's going to buy into the basket of shares. Philip also says he's going to buy into ETFs. And yeah, I think that is always the better strategy to go with. So if you are a beginner, I think that a lot of us as Ghanaians, we are quite risk averse. When we see our money going down, we get scared. So in that case, it's always better to invest in or buy ETFs. And then as you go along and you become more experienced in the stock markets, then you can buy individual stocks. Great. So Philip, you asked what would be my best 5 companies to invest in. That is the job of a qualified professional financial advisor to advise on. I am not a licensed financial advisor, so I will not advise on that. But I will say that if you want to get started, right? There is a lot of content you can read and learn about to know, how to pick stocks. There are services that do that for you as well. But I will always say that always start with ETFs. I myself have individual stocks. I have Nvidia, I have Facebook, I have other tech companies that I have bought their shares of individual shares as well as ETFs. There are some that I sold at a profit, and there are some that as soon as I sold, then the stock started going up, right? So I will not I will not be on Facebook and then give you specific advice on what stocks to buy live on Facebook because I don't want liabilities, right? So but then if you reach out to me personally, I'm sure that I can give some suggestions on that. But I always say that ETFs are the better choice. Great. Hassan, I will also answer your question. I will open the floor for questions. So if you have questions, please, you can start putting them in the chat, or you can keep them. And when we get to the question and answer time, you would look at that. So let's move on and look at some ETFs that are available. Yeah, so I think I asked this question already. So the signs you see over there, IVV, VOO, SPY, we call them tickers, TICKERS. So those are the symbols for the index funds or the shares that you can invest in. So usually when you go into the stock market or the stock app like Bamboo, you can search for a company by its ticker or its sign. So 𝐰𝒏𝒕𝒓𝒐𝒅𝒖𝒄𝒌 are just different ETFs that you can, the tickers for different ETFs that you can invest in. Yeah, so let's look at some of the popular ETFs that are available, and you know, what companies they represent. So I have a number of them over here. So there are about 5 or 6 of them over here. So the first one we are going to look at is the SPY. So SPY is an ETF that tracks the S&P 500. So the S&P 500 is essentially an index that tracks the 500 largest companies in the US. So if you invest, or if you buy the ETF called SPY, if you buy the SPY ETF, you are buying into the biggest 500 companies in the US. So let's say you invest in, $1,000 in SPY. What you are doing is that $1,000 is being spread across all the top 500 companies, the largest 500 companies in the US. So some is going into Apple, some is going into Microsoft, Amazon, and so on. So if you look here, some of the notable companies inside the SPY ETF is Apple, Microsoft, Amazon, Google, and Tesla. So yes, those are some of the companies that make up the S&P 500. Now, SPY is not the only ETF that tracks the S&P 500. We also have IVV and we also have VOO, which I shared. I showed you previously. So those are all different. Those are the tickers for the different ETFs that track the S&P 500. So the second one is the Invesco QQQ Trust, and the ticker or the symbol for that is QQQ. So this index invests in the NASDAQ 100, which are the 100 largest non-financial companies on the NASDAQ. So the NASDAQ is also a stock exchange. So remember I told you we have different stock exchanges. We have the NYSE, we have the NASDAQ, we have the GSE. The GSE is the Ghana Stock Exchange, where the public companies in Ghana list their shares. So if you are interested in, I think I want to invest in the biggest companies listed on the NASDAQ Stock Exchange, but I'm not interested in financial companies for some reason, then you can invest in the Invesco QQQ Trust, which is an ETF. So some of the notable companies in that ETF are NVIDIA, Meta, Netflix, Adobe, Costco, and so on. So you notice that there are some of the ETFs, there are companies that will overlap, right? So you can have an ETF that is in the, you can have a company that is on the SPY ETF, and you can have a company that is on the QQQ ETF as well. So we also have the Vanguard Total Stock, which is the an ETF that tracks the entire US stock market. So every company that is in the US stock market is part of this VTI ETF, right? So if you buy the VTI ETF, you are investing in all of the companies in the US stock market, right? So that is that. Some of the companies included in this ETF include Berkshire Hathaway, JP Morgan, Johnson & Johnson, ExxonMobil, Procter & Gamble. So yeah, you are investing, you put in $1,000 in this ETF, you are investing a small percentage of that money in each of these companies. And we'll look at this last one called the EEM ETF. So this is the emerging markets ETF, which is essentially large and mid companies from 20 different emerging economies, right? So whereas the ones above were mainly US companies, the EEM contains other companies in other countries outside of the US, right? So you have Samsung, Tencent, Alibaba, Reliance Industries, TSMC, and so on. So these are different companies. You notice that these companies are not really in the US, they are in the other countries. So if you are like, oh, I like Samsung, I feel like Samsung are making good phones, they are really innovative, they are improving, and I think that the company is going to get more valuable, and so I want to invest in them. And then you don't want to invest in them directly, then you can buy the ETF that contains Samsung electronics, right? So yes, so this is how these are just some of the examples of ETFs that you can invest in, and then the companies that are contained in this ETF. So remember our previous analogy where we are looking at investing in a basket of companies rather than investing in a single company, which I will say is always the better strategy to start with if you are getting started with investment. So before we move on, I would encourage you to share the stream. As they say, share the link, right? So share the stream on your Facebook or on your YouTube, and yeah, share the link on your status on your Facebook, because I think these are really important, very beneficial things that your friends can also learn from. And the good thing is that if you missed any part of this stream, after the stream, it will still be available on my Facebook and my YouTube. And so you can get access to it and then watch it again. Right. So now let's look at, the performance of different ETFs over the last several years, right? So let's look at the S&P 500, which is just one of the examples of let's look at the S&P 500, which is just one of the examples of the indexes that are available for you to invest in. Now, this is a 5-year performance of the S&P 500. Now, if you invested $1,000 in the S&P 500 in September 2020, that is 5 years ago, it would have grown 100% over the last 5 years, which means that your $1,000 would have become $2,000 in the last 5 years. Now, look at it from Ghana cedis. If you have invested the equivalent of that $1,000 in Ghana cedis at the time, which means you changed your Ghana cedis into $1,000, and then you invested, that was 5,680 Ghana cedis, because at the time the dollar was 5.6 cedis. This would have turned into 24,000 cedis for you over the last 5 years. So there has been 100% growth of the S&P 500 over the last 5 years. Now, what happened around COVID is that a lot of the stocks went down. The whole world was, going to shit, for want of a better word, right? And then stocks went down and all of that. And people were scared, people were selling, and people were afraid that they were going to lose all their money. But since COVID, we've seen a strong rebound of stocks, right, over the last 5 years. Now, there was a mini crisis somewhere mini crisis on the stock market somewhere last year. And so if you look at, I don't know if I can highlight over here, but then if you look towards the end of the graph, you see like there is a dip somewhere, right? And then people were selling their shares because they were afraid. If you had invested money just before, then you would have lost most of the value of your stock, but then it would have gone back up again, and then you would have recovered everything that you had lost, right? So the thing with the stock market is that on a day-to-day basis, if you look at the graph, you can see that on a day-to-day basis or on a month-to-month basis, it's going up, it's coming down, it's going up, it's coming down, it's going up, it's coming down. But generally, it's trending upwards. Generally, it's trending upwards. So that is how the performance has been on the stock market. And so when you are looking at stock, investing in stocks, your mindset should be you are investing for the long term. You are not investing today and taking out your money next month. You are not investing today and taking out your money in 6 months. Usually when you are thinking about investing in stocks, you have to think about it as a long-term strategy or a long-term investment strategy that you are using, or you are investing in for the purpose of some long-term, maybe retirement, maybe you want to buy a house, like something long-term, a time horizon of at least 5 years, where you are going to put in the money there and you are not going to take the money out. Because if you put in the money and then the stock goes down next month and you take the money out, you've lost money. But if you leave the money in over the course of time, the value of your stock will trend upwards. So this is 5 years, right? Now let's zoom out and look at the performance of the S&P 500 over the last 23 years, so 22 years. So let's look at from 1993, okay? So look at the graph. When the S&P 500, this is one of the I'm not sure what particular index this is. Maybe this is IVV. But when they launched, the price launched at 43.94 dollars in 1993. And look at the trend of the graph. It has gone up, and now today is 660, right? And so if you had invested in 1993, you would have seen a 1,403% growth in your investment over that time. So if you had invested $1,000 over that time, that money would have turned to $21,200. Of that, your $1,000 just sitting there inside of your stock account, right? So the point I'm trying to make is that the stock market always tends to trend up. If you zoom out enough and you look at it over a long term, the stock market always tends to trend up. So you have to have the mindset of, I'm putting in the money in there. If I see that, if I put in 200 cedis and then I check next month and the thing has reduced to 150, I don't get scared and take out my money. I wait until it keeps going back up, so that by that 5 years or that long-term horizon, your money would have gone back, the value of your money would have gone back up, and you would make that capital gains that you are expecting. Great. So the mindset around buying stocks or investing in stocks is you are building wealth for the long term. This is not treasury bills where you buy today and then in 90 days you go and take your money. This is, I am thinking long term, and so I am investing now, and I'm expecting that my money is going to grow over the long term. The thing that makes your money grow exponentially over the long term is what we call compound interest, right? Because as you get capital returns, as your stock grows, and then the value of your stock grows, and then you are getting dividends, and then those dividends are being reinvested inside your stocks, it compounds over time. And so when it comes to buying stocks and making money on the stock market, patience is the biggest skill to have. Patience is the biggest skill to have. And because time is the multiplying factor that grows your money, the earlier you start, the bigger the results are going to be, right? Now, there are sometimes good times to start, right? So for instance, if you look on this graph, and then you see parts of the graph where it's like the stock was low, usually that is a good time to buy the stock. People say buy the dip, buy the dip. What buy the dip means is that when you see that people are selling and people are panicking, that is a good time to buy, because the price of the stock comes down, and then you can get some good stocks for lower prices, right? So the earlier, but regardless, I mean, the problem with buying the dip is you don't know how low the dip is going to go. You think, oh, the stock today, the Apple stock was 250, okay? Oh, but it's coming down. Today is 220. And then you are like, instead of you to buy, you're like, oh, let me wait. Maybe it might come down to 200. You don't know where the bottom is going to be, right? So maybe it comes down to 200, or maybe you wait sign, then it starts going up again, right? So anytime is a good time to buy stocks if you are thinking for the long term. So that is the mindset you have to have when you are investing in the stock market. So let's look at, one example of panicking, right? And then getting, let's look at some of the risk of investing. The thing about investing in the stock market is that markets go up and down daily, right? Markets go up and down daily. So you buy a stock today, maybe you go on Achieve or you go on Bamboo and you spend $100 to buy a stock. You buy the stock today, and then next week you check, and then your $100 has become $80, and then you are like, you are panicking, you are scared. Oh, why is the stock gone down? I'm going to lose my money. In fact, if I keep my money here right now, it's $80. Before I realize it's become $50. Let me cash out now so that at least I can keep my $80, my $80. And that is the wrong mindset to go into buy like the stock market with, because markets will always go up and down. So when the stock goes down that way, you've not really lost money because you've not sold the stock. So we call something unrealized losses, right? Which is you buy the stock for $100, and then maybe a week later the stock is $80. You have unrealized losses of $20. So even though the stock has gone down, you've not locked in those losses because you've not sold yet. But once you sell. Now those losses are now locked in, and now you've actually lost that $20, right? And so so long as you don't sell, there's a chance that the stock will go back up again. So this is NVIDIA stock over the last 1 month. If you bought NVIDIA stock last month on 17th August, you would have paid about $182 for the stock. As at today, that stock would have been down by 6.5%, and it will now only be worth $170. Okay, so this is over a 1 month period. And so if you went to panic, if you panicked and you sold your stock now, you would have lost what, $11. But let's see what happens. Let's zoom out and let's see what happens with NVIDIA stock. This is the same NVIDIA stock over the last 5 years, okay? If you had bought NVIDIA stock 5 years ago, you would have paid just around $20 for the stock. But over the course of that 5 years, you would have the value of your stock would have increased by a whopping 1,298% over the last 5 years, right? Which tells you that the day-to-day fluctuations are there, but if you hold out for the long term, the market is always going to be in your favor. Your stock is the value of your stock is always going to increase over the course of a long time, right? So, which goes to buttress my point that if you are thinking about buying stocks, you think about it for the long term, right? So, I'm sure a lot of us have had situations where, we bought something and then we're thinking that, let me sell it now, and then you sold it and then you regretted it and the price went up. Maybe those of you who are into real estate, maybe you bought some land and then you sold, and then 3 years later they came to do the road, and now the land price has increased by like 5 times, and you're like, I wish I had held on to my piece of land. And now the prices has gone up and I've lost out on all of that increase. So that is how it works. So the key or the core message when it comes to investing in stocks is don't panic. Don't panic. Stay focused on long-term growth, and that time is your best friend. Time is your best friend. If you are someone who is scared of short-term fluctuations If you are someone who is scared of, oh, I put in 100, tomorrow I have my money has reduced to 95, they've stolen my money. Why? If you are someone who is like that, then maybe you should get some education first before you start investing in stocks, because you always get scared. But if you hold out for the long term, as I have shown you in all of these different graphs, it always works out in your favor. It always works out in your favor. So yes, that brings me almost to the end of my presentation. I hope that you have learned. Please let me know what you have learned so far. We'll go into a question and answer session where you can, start putting in your questions. So if you have questions, start putting them in the chat. Let me know what you've learned. When it comes to buying stocks, look, the best time to have started was yesterday. The second best time is now. The best time to have started was when you had your first income. The second best time is now, is today. Back in the day, 5-10 years ago, there were no apps that you could download and then start investing in stocks. You have to know someone at the Ghana Stock Exchange, call a broker on telephone, tell them I want this stock, what is the price and all of that, send money there physically and all of that. But now you have a powerful computer on your hands, which is your phone. You can download an app and you can start investing. And so, the next best time is now. So this brings me to the end of my presentation. I'm going to just allow you guys to ask first, let me know what you learned in this presentation. And secondly, if you have questions, you can ask them. So I think I saw a couple of questions in the chat. Hassan was asking, what is the least amount you need to get started? So I told you that you can start. You mentioned 1,000 cedis. So if you have 1,000 cedis, it's always a good amount to get started with. You can buy. You can start with some fractional shares. So if you go into Bamboo and you find any of the ETFs that I showed you are good ETFs that you can start with. I, for one, because I'm tech inclined, I like to go with anything that tracks the S&P 500. So that could be SPY, that could be IVV, or that could be VOO. So once you start with any of those, you can buy a fraction of those for 1,000 cedis, and as and when you get money, you can keep topping up. The key is to build a discipline around this, where you keep buying these shares regularly. So one of the things I do is that every month I buy one stock of an ETF, which is about 600, currently around 600 and something dollars, right? Every month at the end of the month, I buy one stock, which is a strategy that is called dollar cost averaging, because it means that the cost of the stock is averaged over the duration that you are buying it. So maybe at the end of the month, maybe the price is high, is 650, but then the end of next month, it comes down to 600, and then you buy anyway. What that means is that the actual cost is averaged for you to about 625. You get it? So it just becomes a discipline that you can build to keep investing with every little money you get. Because you can buy fractional shares inside of Bamboo, you can keep investing. So you really don't have any minimum to. I think the minimum is very low. I think 100 cedis or something. So I hope that answers your question. And if you want to start, you can start with any of the ETFs that I've shared with you. So Al-Hafiz says he tried buying stocks and he was scammed. I mean, unless you share details, I really cannot speak to that. But yes, I mean, I feel like with a lot of people, you need to be, you don't don't let anybody tell you, oh, give me your money, I'll use it to buy stocks for you, when you can do it yourself, right? So if you don't understand something, it's good to get education, right? Learn the right way of doing things so that you don't get scammed. Great. So let me see, I have some other questions over here. So Joel says that he learned that the best thing one needs in the stock market is patience and time, which is very, very true. Very, very true. The best thing that you can do for yourself is to give yourself patience, to be patient and to give yourself time. Great. Evans is asking, can I use Android to download the apps or I have to get an Apple iPhone? No, it works for Android, it works for Apple. You don't need, I don't have an iPhone, so I use it on my Android phone. So yes, it works for Apple, it works for Android, and it really doesn't matter whether you have Android or iPhone. Can you use your laptop to download the app? I don't think they have a web, like a desktop version. I don't know. Let me check quickly. I think it's mainly mobile. There are some apps that have desktop applications, but I don't know if Bamboo has that. I think they only do mobile apps, so you can do it for Google, like for iPhone, and then you can do it for Android. Great. Any more questions? Any more reflections on what you learned? So while your questions are coming in, let me take the time to tell you about a bit about 𝒕𝒐𝒄𝒌. So as I told you, I run 𝒕𝒐𝒄𝒌, which is a free personal finance platform where I share resources, I share in educational posts and other things on personal finance. So if you go to 𝒕𝒐𝒄𝒌.finance, there are resources that you can download. I will share that screen momentarily for you to see. Now, in addition to that, one thing that I also do is that I offer personal finance coaching. And so if you've started making money and then you are looking for ways to structure your finances so that you can, manage your finances better and then build wealth, then my personal finance coaching would be something that would be good for you as well. Now, there are lots of people, they're making money, but they don't really manage the money well. And so they have a lot of money coming in, but then at the end of the month, they have barely nothing left. So what I do with you is that I basically, listen to your situation, how much you make, what your goals are, your long-term goals, your short-term goals, your medium-term goals, and I develop for you a custom financial plan that you can start implementing right away, around creating a budget, beginning with investments, what particular investments will be best for you, given your particular situation or your particular goals. And so if it is something that is interesting to you, you can book my coaching session, and then we will I'll be able to help you out with a personalized financial plan. I have a standard package where you tell me about all of your goals and your current finances, and then I develop a plan, and then we go through to make sure that the plan is a good fit for you. And there's another package where there are follow-up sessions where we work together to start actually implementing the plans that we come up with. And so if this is something that is interesting to you, you can book me, and then we'll sort out your finances. I think that this is one of the best investments you can make, especially if you are young, which is to get your finances in shape right from when you actually start earning, so that you don't grow up regretting financial decisions that you've made. So aside from that, also, if you come to resources, there are resources that I curate. They are all mostly free that you can just go and download and start using. So there are templates, there are budget templates, there are other tools, there are software that I recommend to track your budgets. There are investment platforms that I recommend. There are books I recommend. There are some that I have written myself. And then there are other useful guides as well. So I recently wrote this savings and investment options guide where you can download and you can look at all of the different investment options you can consider, from stocks to mutual funds to businesses and so on. So those are all resources that you can download. And if you sign up, then you receive all of these resources as and when I release them. I'm currently writing a book on investment, like all of the different investments options that are available to Africans, and then that is going to be released all over here as well. So this is a useful place where you can get all of those resources. So yeah, so you check it out, and then you can, if you find it useful, you can download, or you can book one of my coaching services. I see a few more comments in the chat. Let's see, we have Francis. So Francis says, very insightful session. God bless you. By the way, I thought your junior sister at Megis. Oh, okay. All right, nice. So Hassan says, how do I get a US account? That is, I don't know if this is within the scope of this training, but you can check out an app like Wise. I think that you can use Wise to get a US account, but you don't need a US account to start investing. You don't need a US account to start investing. You can invest in with your Ghana Cedi account. Philip says that between investing in mutual funds and ETFs, what can you say about that comparatively? Now, mutual funds are so ETFs are a kind of mutual funds, but those funds actually are available on the stock market. So an ETF is simply a mutual fund of sorts that is available on the stock market. There are differences to them. Now, a mutual fund is simply money that is pooled. So a company, how mutual funds work is that an investment company decides to pool money from different people, right? So you bring your money, Kwesi brings his money, Hassan brings their money, and then now they take all of that money and they invest in different instruments, okay? So in Ghana, most of the mutual funds, they would take some of that money and invest in treasury bills, or invest in money market instruments, invest some in stocks, and then any profit that comes is shared among all of the members of the fund in the ratio of their ownership of the fund, or in the ratio of how much money they have in the fund. So it's similar, but it's different, right? So for me, I invest in mutual funds through Achieve. I invest in ETFs through Bamboo and other investment platforms that I have. So it's a good strategy to diversify your investments across different kinds of investment instruments. So mutual funds, ETFs, treasury bills, maybe business, land, and so on. So yeah, those are all, that is just another kind of investment instruments that is available. Now, the thing with ETFs is that, the thing with mutual funds is that there are different kinds of mutual funds. So there are ones that are like low risk, where they only invest in like fixed income instruments, so like treasury bills. So you know that any mutual fund you're investing in is being invested in treasury bills. The risk is low. You know that you always get some returns. Maybe the returns may not be very high, but you always get some returns, right? ETFs, on the other hand, are mutual funds, kind of like mutual funds that are specifically invested into companies in the stock market, right? So that is like, they are similar, but they are also different in different ways. Okay, so Hassan says, can I talk a bit about Achieve? I plan to do another session specifically on mutual funds and like treasury bills, mutual funds, and then Achieve in particular, and how you can use that to invest in those. But Achieve is also a very good platform that I also recommend a lot for people who are just beginning to start investing. They have different mutual funds. They have a mutual fund that is branded as DigiSave. Is it DigiSave? Which is like is the one I recommend for people who are just getting started, because you can start with any amount that you have, and then you keep growing. You can keep topping up from time to time. So yes, there is DigiSave. They also have other even on 𝒏𝒐𝒄, you can even invest in. They have an ETF, a local ETF that invests in the global stock market as well. And then they call it Global Tech. So that is also Global Tech on 𝒏𝒐𝒄 is actually an ETF that you can invest in, that invests in the US stock market. So yeah, I will do another session on 𝒏𝒐𝒄. So Joel says he's downloaded Bamboo, but whenever you get to the part where you have to capture your Ghana card, the app does not respond. I think with the caption of the Ghana card, if you have issues with the app, the best people to talk to will be like contact Bamboo directly, like their support. I think they'll help you out. But the problems I've seen with capturing Ghana card is usually people, like, maybe your camera is not clear enough, or you are capturing it in a place which is dark, or you are not lining it up properly, and so on. But I have not had any issue with that. And so maybe try again, clean the back of your camera, make sure that it's lined up properly, the lighting is good, and all of that. And I think it should work. But if you do all of that and it doesn't work, please contact please contact Bamboo directly. So Enrique says, I have $1,000. Would you advise buying one ETF or a split of 2 to 3 different ones? I think it's up to you. Now, a lot of the ETF now, so for instance, if you can find low ETFs that are a bit lower priced, then you can buy multiple. So the SPY, for instance, is currently trading at around $660 per ETF or per share of that. So if you bought one of that and then you found another one which was maybe trading at a lower, maybe 200 or 300, then you can buy that as well. So yeah, you can look at that. But with $1,000, I think you can buy at least 2. And then the thing is, with $1,000, the returns on $1,000, you will have to, the best thing is that you have $1,000 now, you invest. Maybe tomorrow you get another $1,000 you invest. So it's become, once you build that habit of investing, that is where, and then you add that with the benefit of time, that is where you begin to see those returns really adding up for you. Right. So while your questions keep coming in, I'm just going to recap what we learned today. So we learned about the stock market. We learned that the stock market simply represents ownership in companies. You make money via capital gains and also dividends. There are different apps that you can use to invest in the stock market, but today we went through Bamboo specifically as one of the easiest ways for Africans to start investing in the stock market. And the safer way to start is to start with ETFs and index funds. And the way you grow your wealth is to hold for the long term and let time be your friend. And also, when things start happening in the markets becomes volatile and everybody is panicking, don't sell during those times when everybody is panicking. Hold, and then things will get better. So that is what we learned. So thank you all for your time. Thank you all for listening to me. I would say that you should also follow my WhatsApp channel, because when new streams are going on, I'm like doing new other events and other things, like other trainings and other things. I will share those updates. So I'm going to put the link in the chat, and then you can just follow my channel, and then you can get notified when any new anytime I post something new. I also I'm currently working on a series of videos also about the stock market, and so those are all very useful things that would be like useful to people that are interested in personal finance. So I'm just going to share the link shortly. So if you have any questions, put them in the chat. Otherwise, we will be ending the stream in the next 3 minutes. So Joel says, do you have any idea about the Blackstar app? Yes, I have an idea about the Blackstar app. So the Blackstar app is also Blackstar. They are they are like professional institutional investment company. So let me tell you something that you probably didn't know. Now, the mutual fund that you invest in, when you download and you use Achieve, the mutual fund you actually invest in is provided by Blackstar. The mutual fund you actually invest in is actually provided by Blackstar Advisors, right? So they have been usually dealing with large institutional investors. So big companies who want to invest, they handle all of those big investments professionally. But recently, they've also started trying this thing where they've come up with an app for retail investors. So people like you and me who are not like sophisticated big companies who want to invest, we are called retail investors. So they've come up with a couple of apps that help retail investors also invest. The reason why I don't talk about them much is because when I tried the app, I saw that it's like something they are now starting with, something they are now experimenting with. So the app is not particularly like stable yet. Maybe when it becomes I haven't checked it out in like a few months, but maybe it's gotten better. But yeah, they also provide you with options to invest in different financial instruments available in Ghana. Yeah, so you can also check them out. I just posted a link to my WhatsApp channel that you can follow. I think those on YouTube will see it, but I don't know whether those on Facebook will see. If you're on Facebook, if you are watching from Facebook, let me know whether you can see the link. Hassan says that do I have a WhatsApp group? No, I don't have a WhatsApp group. I have a WhatsApp channel and I just shared the link there. So if you follow, then any updates that I post, you can see. So it's free. I don't charge anyone for following the WhatsApp channel, right? Joshua says he's just coming in and he's asking for a summary of the class. Now this will be live. This will be after the stream is done. This will still be on my YouTube and my Facebook, so you can always pick up from where you left off, and then the whole stream will be there. Chris says that he learned that we should be patient when it comes to investment. Yeah, so yeah, thank you all very much. This has been, thank you for your presence. This has been a great session. I hope you learned a lot, and let's keep connecting. Also follow Misika on Facebook, and so that you get access to any content that I post. So I think those on Facebook probably cannot see the links I am posting. So I'm going to post them from my phone and see if that works. It works for YouTube. It probably does not work for Facebook, I think. So let's see. I'm going to post the link to the channel on Facebook from my phone. I think you should be able to see it there. Yeah, so thank you for joining me. Okay, so those, I think Joshua says, can I get a link to the phone, the app? I'm going to post that as well. So I just posted a link to the WhatsApp channel. I'm going to post a link to the app as well, the Bamboo app. On Facebook. Yes, so thank you all for joining. Okay, I have posted the link to the app as well, the Bamboo app as well. Yeah, all right. So all of you stay safe, have a good evening, and then see you on the next one.